Our top story, the new financial year may have just begun, but the government gets cracking on divestment, adds 10 more companies to the sell-off list, eyes 34,000 crore rupees from the stake sale in those companies. That's an exclusive.
Inflation is well and truly on the glide path, slows to a 3-month low of 5.17% in March, well below street expectations. Meanwhile, the government sources say that they expect only one 25 basis points rate cut from RBI this calendar year.
Prime Minister Narendra Modi meets German Chancellor Angela Merkel and woos investors, promises a stable tax regime and says India is now a changed country. Corporate India upbeat about investments to India.
The defence sector is buzzing with activity after Modi government's pledge to boost domestic manufacturing. We turn the spotlight on Samtel Avionics, a lesser-known company but one that manufactures components for Sukhoi jets.
If you are going to implement consent laws and the SIA, there will be no irrigation in the country. Now there will be no rural infrastructure. We cannot acquire any land for defense and security purposes.
The man who leads the government's charge against UPA's Land Act says the centre will not budge on changes to the Act. Centre will also challenge the Green Tribunal order against old diesel vehicles plying in Delhi.
And Nitin Gadkari is also upbeat on the reviving the road sector. Says he has moved cabinet note to revive 26 stalled road projects. Will seek levy on exit clause and reduction on penalty to 1%. Banks have no cause for worry. Roads, Ports and Waterways Ministry will add 2% to India's GDP by next year.
As the debate over net neutrality rages on, CNBC TV 18 learns it's not just Bharti Airtel. Other telcos like Vodafone, Idea and Reliance Communications are also opposed to net neutrality. That's an exclusive.
We need to invest in the Middle East oil production today.
IEA chief economist Fatih Birol says lower crude prices and tensions in Middle East have prompted a 20% cut in investments. Also says India needs $100 billion of investment every year in the energy sector.
The bulls are in pole position on Dalal Street. A late surge lifts sentiment in a volatile session. Sensex regains 29,000, Nifty above 8,800. Market guru Mark Farber believes emerging markets are much cheaper when compared to emerging markets.
The government notifies new rules to appoint judges and scraps the collegium system. This even as the Supreme Court is still hearing the case over the new method.
Net neutrality is very important for us. It's important for a host of reasons. I think it's important from our point of view of innovation. It encourages app developers and OTT entrepreneurs.
I've asked them to give me a report by the second week of May after widest consultation possible.
It's literally the people against telecom companies as telcos unite to oppose net neutrality. The overwhelming opinion on social media platforms is batting for free internet. Good evening and thanks for joining us here in India Business Hour. I'm Nantara Rai. Surbhi, have you signed that petition or given in your comments as yet?
Well, I'm just going to let my own position on this remain confidential. But I think we know which way public opinion is veering. Just one look at that hashtag net neutrality on Twitter and we know basically which way this debate is going. Which way the government heads, I think we'll have to wait a couple of weeks. The consultation, the result of the consultation, and of course that special note should be out by the middle of May. Net neutrality, definitely one of our top stories tonight. But also, let's start with the markets. A strong start to the trading week on Dalal Street. The bulls were a bit sluggish in early trade, but as the day wore on, they took complete control. The Sensex has reconquered the 29,000 mark after gaining over 160 points. The Nifty also surged past the 8,800 level, gaining over 0.5%. Blue chips led the way in trade today as mid-caps underperformed marginally.
Right, and here's a CNBC TV 18 exclusive. Lots of stocks buzzing in trades on the back of this story. The government has drawn up an ambitious 34,000 crore rupee divestment pipeline for this fiscal. That's because 10 relatively smaller companies have been added to the divestment list. And these additions should make up for the delays in big-ticket divestments like Coal India and ONGC from last fiscal. Sapna Das now joining us with the exclusive details. Sapna, a daunting task before this government. It set itself a target of almost 69,000 crore rupees in divestment. What's the game plan?
Well, clearly here there are two aspects to that. One is the strategic sale on which the government is firming up its plans. That's one side of the picture. The other, the main story here is, of course, the pure disinvestment target that we're talking about around 48,000 odd crores. Well, here we are aware about the fact that the government is building an aggressive pipeline. This is something that has been in the public domain for quite some time. A couple of new companies that they may look at actually to make their divestment plan for the current financial year successful. And some of those companies that we can talk about, maybe NBCC, BEL, HCL, MMTC, SGC, a whole lot of fertilizer stocks also, fertilizer companies also. You have RCF, you have NLC. You also have big steel companies like NTPC, or rather you have big stocks like NTPC also to talk about. Around 5% is what they're planning to disinvest. So if you look at these candidates, they're some of the newer candidates that we are hearing about. It's not that they have not been there on the radar, but it's just that they are finding a mention in the government's action plan for the current financial year at least. And if not in this financial year, it's not necessary that all these stocks will be disinvestment in the current year itself. But yes, this is the game plan as of now. So if not now, then probably sometime later, probably even for the next financial year. And in terms of the existing calendar, the big ones that we are already aware about, IOC, a 10% stake sale, well, they could garner anywhere between 8,500 to 9,000 crores over there. The timing, of course, is something that the government has to decide. You also have EIL 10%, you have NMDC 10%. We are already aware about that. Around 6,000 crores is what they plan to garner. 5% in BHEL. So it's a very robust pipeline that we're looking at. And mind you, this pipeline is not it. This is getting expanded almost on a weekly basis, so to say. So it really depends on the government's comfort level as to which stock they will disinvest next after REC, especially the kind of fantastic retail response that REC got.
All right, Sapna, thanks so much for that. Well, we did speak with Divestment Secretary Aradhana Johri earlier today. She refrained from giving out names of companies or any kind of a near-term divestment target. However, she did point out that the government is moving faster over selling stake in PSUs.
The stocks that we have on offer are all blue chips. They're all excellent deals for people to buy. And REC is no exception. Secondly, I would say that yes, we have a big target this year. And we've started early because we have to give it our best shot. We have a lot of companies lined up. We are going to fast-track our approvals process. And yes, wait for the market, because some of them, the market doesn't look so good today. Some of them, the market looks good today.
Divestment Secretary, they're sounding confident that the divestment target should be met. That target, of course, being almost 69,000 crore rupees. Moving on, this is a pleasant surprise coming in from the macroeconomic front. It's the inflation number. Consumer price index for March has slowed down to 5.17%, and that's the lowest level we've seen in 3 months. Lata Venkatesh now joining us to help us understand that CPI number a lot better. Lata, this is much better than expectations.
Well, there was some limited expectation of a 5.1 number, but that was a minority. A large majority were expecting about 5.4, and our range was 5.08 to 5.6. But our own poll threw up a number of 5.36. So this is a good 20 basis points lower than what the street was expecting. This is clearly a very good number. What's even more important is that along the entire range of food items are indicating an index number in March lower than that in February. So whether you take cereals or vegetables, all important contributors and weighty items in the food basket, they're all either stable or lower than what they were in February. It is just a marginal increase in fruit. Otherwise, you're seeing a consistent performance of March prices being lower than February. This is important because one was expecting the brunt of the unseasonal rain impact to fall in March, because the rain disruption had happened in February. The weather disruption had happened in February. But what we notice is that March is shows remarkable absence of any such impact. Further down, even the non-food items like housing and clothing and footwear are also showing a decent amount of continued disinflation. Clothing, for instance, clothing and footwear have come in at 6.27% compared to 6.38% in February. Likewise, housing has come in at 4.7% compared to 4.98% in February. So these items which fall because the general inflation expectations have fallen are indicating that the disinflation process is continuing. Of course, the best indication is the core inflation itself. Removing food and fuel, the core inflation has come in at 4.1, similar to the level that we saw in February. If you took the RBI's trajectory, which is available in the macroeconomic report that was released along with the credit policy, it looks like the March inflation has slightly undershot the RBI's trajectory as well. If this continues in April, and indications are that the first 10 days or the first 12 days of April are indicating that the seasonal uptick in prices in summer is not as bad as it has been in previous summers, then the space definitely opens up for more rate cuts.
A very good number. Not entirely unexpected. We were at 5.3. This is 10 basis points below that. And I think it's a good number for two reasons. Remember, this is the month in which petrol and diesel prices were marked up between 5 and 6% at the end of February. So that's already embedded in this number. And you had the upside risk to food because of the unseasonal rains, which shows up a little bit in vegetable prices. Because in the high-frequency data, vegetable prices actually fell by 6%. But the fact that they've been stable here suggests that upside risk did manifest itself. So keeping in mind both these unfavorable factors, the fact that you have a 5.2 will give a lot of comfort to the central bank.
The inflation print was lower than what we and the market was expecting, which is a good sign. If you look at the food index, then typically in December, last year the food index declined by about 5 big figures. This year it has hardly declined by more than 3 big figures. Is the lesser decline in prices already showing some impact of the unseasonal rain? I think that's the open question for which we still don't have an answer.
Certainly, I think these numbers are suggesting few things. One, the inflation range is now probably coming under control. In earlier days, I think when we never used to find that kind of a comfort, I think we are finding a good comfort with the range of inflation in which the data are coming out, which means that in going forward, if this range sustains between 5.5%, according to me, I think the market would remain pretty comfortable with that part of it.
There you go, 3 influential voices on what they expect from the Reserve Bank of India. And almost 5 to 6 hours before that CPI data of 5.17% had come out, CNBC TV 18 had exclusively reported, citing a senior government source, that this year, in 2015, expect another 25 basis rate cut. Nothing more, nothing less. Sources had pointed out that the Reserve Bank of India and North Block were very much on the same page when it came to the monetary policy, and that the next rate cut of 25 basis points was expected sometime around July or August. Of course, all of this before the CPI data came out. It'll be interesting to see that if you see the inflation data carry on coming downwards and surprising the street, will the governor go ahead and have a rate cut of 25 basis points before July and maybe even follow that up later on with another one towards the end of the calendar year? As far as the economy goes, what we're also understanding from North Block is an insight that we have is that after that 5% IIP data for the month of February, the government is indeed hopeful it will increase to 7% once mining has been factored in. Remember, mining had pretty much come to a standstill. It has a very high weightage of almost 14% when we talk about the headline IIP number. So you look at that and you look at the banks transmitting the lower interest rates, expectations being almost 2% in 2 years. It looks like the economy is on the right track. Survey.
All right, Nayanthara. Well, on that note, let's move on. Higher interest rates are the single biggest impediment to investment. Now, that's not a word coming in from Arun Jaitley, but his predecessor, P. Chidambaram, who believes so. In an exclusive interview with CNBC, the former finance minister also added that the RBI is right in being cautious over rate cuts. He also cautioned the government against targeting growth of over 8%, saying it could be inflationary for the economy.
I don't think he's on an easing cycle, but he wishes to get onto that cycle. But he's waiting for more data. I think he's right. I think we need to see how the monsoon turns out. It's very critical. The monsoon that should break out in end May, early June is very critical. We need to see how the Kharif crop turns out. But I think going forward, is obliged to ease the interest rates. Interest rates have to move down. That is a single biggest factor that is inhibiting investment. 7.5 is achievable. It could be a few basis points above 7.5, closer to 8. But I can't see how it can be more than 8. In fact, I would caution them not to attempt anything more than 8, because then that becomes a bit inflationary.
Well, moving on to the hot story this evening, the launch of Airtel Zero, which proposes to give preferential treatment to select websites, has kicked up a storm over net neutrality. Telecom regulator TRAI has received over 1 lakh emails today over the issue through the website Save the Internet. The emails have been sent in response to the regulator's call for public consultation. Telecom Minister Ravi Shankar Prasad has said that the Committee on Net Neutrality will be submitting its report by the second week of May. The minister went on to say that the government should not be discriminatory on internet availability.
The TRAI is undertaking a consultation on the whole issue of net neutrality. TRAI being an advisory body, their advice is certainly entitled to our respect, which I am awaiting. Way back in January itself, I have also constituted a committee headed by senior officers of the government in the telecom ministry to also give me a report on the whole gamut of net neutrality objective, its benefits, advantages and limitations, including the regulatory and technical issues.
And that committee's report expected by the 9th of May. Now, one thing is clear, there seems to be a convergence of opinion across the political spectrum. Congress leader and former Minister of State for Telecommunications, Milind Deora, has also batted for net neutrality. He said Airtel Zero would eventually shut out smaller internet startups. Here's more from him.
Net neutrality is very important for us. It's important for a host of reasons. I think it's important from our point of view of innovation. It encourages app developers and OTT entrepreneurs, which otherwise would never have a say and receive funds and be able to, build out a business. Secondly, it's obviously very important for the consumer. It does away with paid prioritization, for instance. And I think in the long run, it's also good for the telco. I think the biggest misconception, unfortunately, comes from the telcos who tend to see it as potentially eating into their short-term revenues.
Well, it's not just Bharti Airtel. CNBC TV18 learns that other telecom companies are also opposed to the concept of net neutrality. Sources say the telecom giants like Vodafone, Idea and Reliance Communication have responded to the regulator TRAI's consultation paper. Kritika Saxena now joins in with exclusive details. Telecom companies completely united trying to stop the concept of net neutrality, Kritika?
Well, one would have thought that after Bharti Airtel launched Airtel Zero, most players would have been against it. However, since TRAI has issued a consultation paper asking public opinion and telecom players to respond with their comments on net neutrality, most telecom players have gotten back indicating that they are against and opposed to the concept of net neutrality and indicating that they are opposed to any kind of licensing regime being introduced by the telecom regulator. Now, my sources say that individual players, including Reliance Communication, Tata Teleservices, Idea as well as Vodafone have responded saying that they are opposed to net neutrality. Bharti Airtel is yet to get back with their formal comment to TRAI. They, I understand from my sources, have a deadline of around April 29th to get back with their comments, and by the second week of May there will be a formal report submitted by the committee on net neutrality. Now, what I understand though is that telecom players have gotten back to TRAI saying that TRAI needs to consider creating a level playing field when it comes to OTT service providers like WhatsApp, Viber, Skype, etc. Since they have been eating into the revenues of telecom service providers or TSPs, what they say is that the hit is not just on revenues and balance sheet, it's also on the network capacity, which has been a big negative for TSPs over the last 6 to 7 months. They are asking for a level playing field, but without the introduction of net neutrality. So the industry is fairly united when it comes to opposition of net neutrality being introduced as a regulatory concept. However, they are asking for a level playing field regardless.
No surprises there. All telcos seem to be against net neutrality. Thanks a lot, Kritika, for joining us with all of those exclusive details. It's going to be interesting to see how this one concludes, given there's such a huge outcry from the public. And now the big exclusive interview of tonight. The man who leads the government's charge against the UP's Land Act says the centre will not budge on the changes that are being proposed. Union Minister Nitin Gadkari spoke exclusively to Shireen Bhan. Gadkari said the centre would also challenge the National Green Tribunal's order against old diesel and petrol vehicles plying in the national capital. He's also spoken about his ambitious plans to spruce up road projects that are stalled. Here's an excerpt of that exclusive conversation.
Our government is very much clear. If you are going to implement consent laws and the SIA, there will be no irrigation in the country. Now there will be no rural infrastructure. We cannot acquire any land for defense and security purposes. We cannot acquire any land for the rural in the area for low cost housing for the poor people, landless and homeless people, and this is against the country.
So, will you attempt to bring the bill to the Rajya Sabha in the next session of Parliament, sir?
Sir, actually it's a procedure. We have to go to Rajya Sabha. We will try to convince them. Now the Biju Janata Dal is supporting us. So they are supporting. I feel that.
Have you managed to convince your own allies? The
problem is that all people, when talking individually, they are always talking against this act. When they are sitting in the parliament, they are taking position to oppose this act.
Question, sir, which also relates to the courts in a sense, and that is the order of the NGT, the National Green Tribunal, to ban vehicles, diesel vehicles over 10 years and petrol vehicles over 15 years from plying in the NCR region. Are you going to appeal that? Because I understand that truckers have now threatened to go on an indefinite strike against that order. And of course, the order has now been stayed for 2 weeks. The NGT has given the government time to respond.
Frankly speaking, we welcome this order because pollution is a big problem. Swachh Bharat, Pradushan Mukta Bharat is our mission. But now the problem is already my department encouraging ethanol, biodiesel, biogas, electric, which give permission to e-rickshaw. We are making 100% this fuel. And when we go for hydrogen, we are going to go hybrid models to reduce the pollution. But within 2 weeks, it will not possible. Lot of people have taken a loan from the banks. It will take some time, at least 6 months, to make an exact correct policy for that. And to implementation of it, we need some years, 2-3 years for that.
I'll ask you about the road sector, sir. And the combined exposure of banks to the road sector stands at about 1.67 lakh crore rupees as of the month of February. A couple of weeks ago, when I had a conversation with the finance minister, he said that in order to revive stalled road projects, the government is looking at providing some sort of a lifeline. Can you update us on what the current situation is? What is going to be this lifeline? And should the banking sector be worried because of the exposure to the road sector at this point in time? How are you going to alleviate the pain?
Actually, when I taken a charge as a minister, our road construction was 2 kilometers per day. At the end of the March, it was 12 kilometers per day. And at the end of May, probably approximately it will go to 14 kilometers per day.
At the end of May, 14 kilometers a day.
1 year when we complete our government, it will be 14 kilometers per day. When I taken a charge as a minister, there was the project of 3,80,000 crores approximately they were stuck up. We have decided to take the decision. The project was stuck up because of land acquisition problem. Project was stuck up because of environment, forest problem, railway overbridges problem. Somewhere litigation was there. So we have taken a decision. The online system started by railway. Because of that, 78 ROB projects already have been cleared by the railway. The environment and forest ministry, more than 70 to 80 projects they are also cleared. Now 44 projects, the contractor concessionaire is not ready to work. They say it's practically impossible work because 3 years, 2 years delay is there, cost is increased. So we make a golden shake hand and we terminated 44 projects. Then 84, 86 projects, we have find out the way out. We have given them a clearance and the projects are running now. They are moving fast. Out of 26 projects, there is a problem that we cannot find some solution because of our limitation. So we approached the cabinet. 3 suggestions we have already given to the cabinet. Now we have already meeting with the finance minister and this cabinet note is pending with the cabinet. After the clearance of this note, at the end of the April, suppose the note is clear, at the end of the April, there will be no single problem in our
What is going to be the solution, sir? What is it that you proposed to the ministry, to the finance ministry and the cabinet in terms of the solution to revive these stalled 24
projects?
Actually,
there are 3 proposals. One is suppose a company have got 5 projects and one project is completed. In present law, they cannot sell their project.
Right.
If they can sell their one project, they can complete
so
the
you're making the exit clause easier.
So that is we have to get the permission. Second problem, we have to somewhere there is a problem for land acquisition, environment, other problem, which is a government problem, state or central. In that case, there is a 5% penalty there. So we are requesting we make 1% penalty and we will close the project.
Okay.
So that is the second thing. And third thing is there are some small decisions where our department needs to authorize to take the decision in NHI board or to the ministry. So by which I feel that we can solve our 100% problems. And these 26 projects, if the cabinet note is to be cleared, there will be no problem up to the end of April or in any interview when I will give you in May first week.
All stalled projects will be done.
Every problem is solved, 100% problem solved. And now I request to the bankers, don't bother.
Okay.
So you're
telling the bankers not to bother?
Don't bother.
Everything will be all right.
Now we introduce the new system, that is the hybrid project.
Yeah.
Where 40% of the cost of the project is given by the government. 60% from the concessionaries, out of which 30% from the concessionaries and other 70% from the bank. And there is clearances, environment forest clearances, land acquisition will be responsible to the government. At the same time, it will be on NET. And interest cost plus 2 to 3% profit will give them. So it can be a easy model for them. And now we have already going for tender for new 14 projects on hybrid model, and the people are giving good response to it.
14 projects under the hybrid model. What does that mean in terms of targets, sir? Because the last conversation that we had with you, you said 15,000 kilometers of roads in 2 fiscal, which means by March 2016. You're standing by that target, or you're going to exceed that target?
Not 15. I want to rectify you.
Okay.
I have a target within 2 years.
Within 2 years, exactly.
Yes. The May 1 year is completed. In the next May, we will give you. This is my target. I don't know whether I will succeed or not, but it's my plan that it will be 30 kilometers per day. So that is the target. I am confident that I will complete that.
That seems to suggest that you're not giving Mr. Fadnavis clearances and approvals to go ahead with that project. He wants to start that project in December. Truth to those reports, or is this an exaggeration?
It's very unfortunate the way in which the media is doing. It's not good. Actually, the fact is that I have opinion that we should have an underground tunnel by which we can make.
Is it feasible, sir?
When I am talking 100% feasible, my track record is whatever I say, I always complete that one.
So you're...
But there is a study report, we are going to appoint a consultant. I will tell you, I will clear the matter. And Devendra ji has got the vision that he can make a coastal road. And he want to make that Nava Sheva to Shivri project. That is originally when I was the minister. I planned that project. Now already I have a discussion with the chief minister. I will say whatever the Maharashtra government and you, whatever decision you will take, I will support you.
But the Maharashtra government has apparently been writing to you. They've written to you 3 times over asking for clearances to use the JNPT land as well as the Mumbai Port Trust land, and clearances are not coming from your ministry.
You understand one thing. As far as this Nava Sheva to Shivri, they don't need BPT land. It is a wrong information given to the media. First of all, in JNPT, if somewhere they need the land, we are ready for that. We have no problem. Whatever the decision taken by the Maharashtra government, the chief minister, we will support it.
Look at strategic divestment as far as the ports are concerned.
We will think about it in Cochin shipyard. It's a really good company of my department. It's doing good job. We are increasing some equity. Government has taken decision to sell some equity. It's going on. Now we need a professional approach, development-oriented approach, at the same time approach with good technology, e-governance, and inviting the foreign investment with low-cost interest. That is the need of the country. And my department, ports and inland waterways and roads, I have decided that next May, I will contribute 2% GDP in the growth of this country.
That's Nitin Gadkari there on the government stance as far as amendments to the Land Act goes, as well as his plans to turn around the road sector. With that, we have to wrap up this edition of India Business Hour. Thanks for watching.
Good evening.